So welcome everyone for another fabulous CLC Time webinar. It's a great joy and a pleasure as always to be here introducing the webinar. Another fantastic lineup today. Today's topic is Natural Capital Accounting with Associate Professor Brian Maybe and Dr. Tony O'Grady. I'll just say a few words of introduction about them in a moment, but before we do that, just a note that we are recording today and that we will make the recording available afterwards. And I'd also just like to do an acknowledgement of country. If you want to just bring up that slide, I'd like to acknowledge the traditional owners on all the lands on which we meet across Australia in all the places that CLC Time does work. And I'd like to acknowledge the elders, both past and present, the traditional custodians for me right here are the Jagera and Turrbal people, and extend that acknowledgement right across the country. So what we'll do now is we'll just say a few words of introduction for our speakers today. We're very lucky to have Dr. Tony O'Grady with us, who is a senior principal research scientist at CSIRO. He leads much of CSIRO's natural capital accounting work and has done that for some time now. He's based in Hobart in Tasmania. And also important to note there is his role in natural capital for the World Economic Forum. So very lucky to have Tony with us. I'll also introduce Brian while we're here. Brian will be the second speaker today. So Associate Professor Brian Maybe is Associate Professor in Economics at Curtin University, Mineral Economics. And he is leading Program 2 within CLC Time. So it's a great pleasure. I get the joy of working with Brian all the time. It's a great honour for me, but it's a greater pleasure to hear from him today. He's done a lot of work, not only with CLC Time, not only with Curtin, but also with governments from around the world and also major mining companies. So quite a diverse and extensive background. We're very lucky to have such a great lineup today. Without further ado, I'm going to hand over to you, Tony, and we'll get going with the webinar. What I will mention, though, is please enter your questions and comments into the chat. When the presentations are finished, I'll moderate those and I'll feed them to Tony and Brian when we get to that point. So please add your comments and questions as we go. Over to you, Tony.
Tony, you're on mute.
How's that? Would be a quite old presentation. Good morning, everyone, and or good afternoon, depending on where you are. I will just acknowledge the Muwinina people, who are the traditional custodians of Nipaluna Hobart, where I'm based today. I acknowledge that the Muwinina people didn't survive colonisation, and that the Palawa and the Pakana people are the ongoing custodians of the lands in Lutruwita, Tasmania. So, and I acknowledge their ongoing custodianship and their elders past, present and emerging, and extend that across the country as well. So, and thanks very much for having me here today. So, nature matters, and I think there have been two significant reviews in the last decade that have been quite influential catalysts for change, particularly in relation to how we think about that interface between nature and the economy. So, many of you will be aware of the Stern Review in 2006. Which really made the case for the risks that ongoing climate change make to the economy. This was followed in 2021 with the Dasgupta Review that basically took a similar logic that Stern took and interpret that in terms of what are the impacts and dependencies that the economy has on nature, and what are the risks that those impacts and dependencies have. And so I think, particularly over the last 5 years, there's been a really significant increase in that understanding of just how much we rely on nature. As the sort of headline number is around $44 trillion worth of GDP is highly or moderately dependent on nature. And if you look at, what are the top 10 risks in the latest global risk report from the World Economic Forum, you can see that, the top 4 are environment related. So this concept of nature being a material issue for the economy has really risen to prominence, particularly in the last couple of years. And and what we've seen is the emergence of international targets around net zero, and more recently the nature positive targets. So thanks, Brian. So what we're seeing is actually there are a lot of concepts floating around out there, and terms like nature and biodiversity and natural capital, and if you look at the definitions of all of those, you can see there's quite a lot of overlap in the definitions, and I think this has been a significant source of confusion for people. And so what I've done is I've had a go at trying to organise some of those definitions into this graphic that's on the screen here. And it's not a new concept. It actually builds on work that a colleague of mine did when he was working for the Bureau of Meteorology. It's something he called the Joint Perspectives Model. And what I'm trying to demonstrate here is how these different definitions are working together. And so at the foundation of it all, we have nature, which is the physical and the biotic and abiotic components of the world that we live in, whereas biodiversity is really focusing down on those living components of that. The concept of natural capital sort of sits at the interface between nature and society, and obviously the economy is a sort of emergent property. But what really all this is trying to say is that the economy is deeply nested within nature and that natural capital perspective. And so that ongoing degradation of nature that we talked about a little bit earlier on, you can see how it can start to undermine the foundations of that economy and start to really weaken that economy and weaken the resilience of the whole system. And so when we think about concepts like nature-based solutions or natural climate solutions, they're really, if you like, a way of reinvesting in those foundations and regenerating those foundations so that the economy remains resilient into the future. So, Brian. And so what we've got is, for better or worse, we've got this concept of natural capital that sits at that interface between nature and society. And natural capital adopts if you like, a very much an instrumental perspective on nature as it really tries to quantify and value the contributions that nature is making directly to human and economic well-being. And so within this context, natural capital is the stock of renewable and non-renewable resources, the plants, the animals, the air, water, soil, minerals, ecosystems, that combine to create that flow of benefits to people. And so the concept of nature as capital, it's not new. It's been around for, I think, since about the 1970s. And really what it is aiming to do is to frame nature as an asset rather than as a resource to exploit. And that reframing of nature as an asset is really quite deliberate, as it actually focus on trying to ensure that nature's contributions are explicitly valued and factored into decision making. And so one of the distinguishing features of natural capital as opposed to other forms of capital is that when managed properly, it's self-generating and it doesn't depreciate, and will continue to provide those goods and services to humanity indefinitely into the future. But unfortunately, it's this characteristic that I think has been a key driver of its decline, as it's been perceived as being limitless and free. And so what we're in the process of doing is really trying to reframe that and start to bring nature back into that decision-making process. So if natural capital is the stock of assets that we're all dependent on, it's the ecosystem services, those flows that of benefits that are used in human and economic activity. And so the ecosystem services, these include things like provisioning services, so that, the things that we're all familiar with: timber, fish, minerals, etc. Regulating services, so the things like global climate regulation, water filtration, pest control and pollination, or cultural services, so the recreational or spiritual benefits that we derive from nature. And it's this quantification of the ecosystem services that provides a basis for the valuation of nature's contributions. So we can actually use existing sort of economic principles to value those contributions into the future and put a price, if you like, and value the underlying asset base that they're dependent on. And so, and that concept's fully aligned to the way that valuation occurs in more traditional economic settings as well. So natural capital accounting then is just the process of calculating the stocks and flows of those natural resources in a given region, and helping us bring them on to a more bring it together in a more systematic and robust way. So, Brian. The other concept that we will see a lot of, that people are hearing a lot of at the moment, is this concept of natural capital assessment. And so where natural capital accounting creates a picture of the stocks and flows of nature, a natural capital assessment then is just a systematic way of exploring what are those impacts and dependencies that we as a society or as a business or more globally have on nature. And so we can think about a natural capital impact as the positive or negative impacts that we have on nature. So positive impacts might be, the restoration that we're doing, or negative impacts such as emissions into the atmosphere. A natural capital dependency is something that people probably don't think about too much, but is really what are those direct inputs into our production system, so the water resources that we're using, for example. And so if you take the assumption then that we're all reliant on natural capital, a natural capital assessment really helps us to understand how we impact on nature, and in many cases, and can help us to understand what are the risks and or opportunities that are associated with those impacts and dependencies. And it's this risk objective that's a key driver of the emerging disclosures regime. So things like the TCFD, the Task Force for Climate-Related Financial Disclosures, and the Task Force for Nature-Related Financial Disclosures. And so really, natural capital accounting and natural capital assessment, although they're quite closely related, they do serve interrelated. They do serve different purposes, and really what we've been doing in this project is exploring how these concepts sit within a corporate setting to sort of better understand how organisations might start to value the natural capital that they're interfacing with, and understand the risks and dependencies that their interrelations with natural capital create for them. So, thanks, Brian. And so what we've seen in the last couple of years is, I suppose, an explosion of different initiatives and schemes and frameworks and reporting standards and things like that. And it really is an acronym soup out there. And so, that's actually creating quite a lot of confusion, and people are sort of like, oh, what's going on? Like this nature space looks so complex. But what we're hoping to do, what we set out to do in this project was try to develop guidance materials that the industry could use to actually start to cut through some of that confusion and provide some clarity for industry and pathways to step forward. So, thanks, Brian. So, and we're also seeing that rise in ambition reflected in the scientific literature. And so this is some work I've been doing with BHP, and what we can see is that the numbers of papers over the last 2 or 3 years in particular that are referring to this concept of nature positive there's been a massive uptick, and there's been also a concurrent downturn in the use of terminology such as no net loss and things like that. So a lot of activity, and a lot of this the scientific literature was really about preparing for the adoption of the Kunming-Montreal Biodiversity Agreement. So, Brian. But really, and I think this graphic does just a really nice job of explaining what really organisations are being asked to do. And this is something called the ACT-B framework. And what it's asking us to do is asking all organisations to do is start to think about, how do you assess, and that means measure and value and prioritise the impacts and dependencies that your organisation has on nature. It's asking you to commit to setting science-based targets and to put your company onto a trajectory that minimises or even restores nature and reduces as much as possible the negative impacts that has on nature. And it's asking organisations to think about what are the strategies that they need to adopt to actually transform their processes. And really start to think about lifting the implementation of the mitigation hierarchy from something that's a more of an operational tool into much more of a strategic framing, and using that concept of avoid, minimise, regenerate and restore as a general framing for a strategy as we go on. And what we can see around that is it's enveloped by this call for disclosure, an open and transparent disclosure. And so, right, thanks. And it's this disclosure space that we've been trying to unpick with the guidance materials that we've developed in this project. And so this is something I've taken and adapted from the TNFD as a way of trying to bring it all together. And what it's saying is that, at a high level, the Convention on Biological Diversity and the United Nations Convention on Climate Change have set high-level targets globally. So obviously, we want to try and avoid 1.5 degrees of warming, but we also want to start thinking about setting a nature-positive agenda for that. But it recognises that governments can't do this on their own, and it's really calling on all organisations to start to step up to the plate here and make their contributions. And so for organisations that have a direct interface with nature, so mining, for example, those companies within the resources sector, but also for industries like agriculture and fisheries that have that direct interface with nature, then the quantity and quality of the natural capital under their stewardship is a material issue for their stakeholders. And really things like environmental accounting are really well set up to do that. And so, at the centre here, we have the environmental accounts as framed by the system of economic and environmental accounting. And so, that actually provides the framing for how you might do that, and how we can start to aggregate that information across the economy into a set of national accounts. And so, but all companies are being asked through things like the TNFD and TCFD to really start to analyse what are the impacts and dependencies that those interactions with nature have, and thinking about, well, what are the risks and opportunities that are associated with those impacts and dependencies. And it's these risks and opportunities that the standard setters are starting to ask organisations to disclose. And so you'll see, as we see the emergence of the general requirements for sustainability related financial information, the climate related disclosures, and then possibly coming forward are more nature related disclosures. It's really starting to think about how do we get organisations to disclose those risks and opportunities to the market and drive decision making amongst their stakeholders. So thanks, Brian. And so really what we've been doing in as part of this project that was funded by DQ was testing some of that thinking around natural capital accounting and natural capital assessment within the mining sector. And one of the key outputs that we were asked to develop was a set of guidance for the mining sector specifically. That guidance material is specifically designed to build on work that we did earlier for the forestry industry, and has evolved into what became known as the Natural Capital Handbook. What the guidance really tries to do is set out the key concepts in this space, and try to cut through some of the noise that's out there, and build that understanding around what's the purpose and utility of natural capital accounting and natural capital assessment, and how do these concepts come together. the guidebook draws heavily on existing guidance like the SIA, and as a framing for the accounts, and it proposes approaches to the presentation of the natural capital information. So, but it's not an attempt to be a new framework, or it's not trying to be a standard, really, and it's not trying to recreate. All it's trying to do is to provide pointers to people trying to apply this in their own organisations to other resources where they can go and get more detailed information if they need to. So quite often there'll be, a concept introduced and a link, say, to see a page 157, or if you need more information on those things. So the work that we've done in the resources sector guide is really has encapsulates a lot of our updated thinking that we've learned a lot from trying to apply this in real world situations. And so the way that we're framing the accounts within this is slightly different to some of the earlier versions, and it's also more explicitly aligned to the recommendations of the Task Force for Nature-related Financial Disclosures. So, thanks, Brian. And what it tries to do is conceptualize the problem as an information system, and sets out what are the schedules and registers that an organisation might need to do in order to facilitate comprehensive and complete disclosure of their natural capital under stewardship, and the impacts and dependencies and associated risks and assessments that are associated with those. And so what it sets up is a set of 6 statements that might be that organisations might disclose. 3 of them are natural capital accounts, and they're structurally very similar to financial accounts in that there's a balance sheet and an income statement and a thing that we call the ecosystem change statement. And they really give information about the organisation's natural capital position and the performance of their stewardship of that natural capital. The other 3 statements are the impact statement and the dependency statement and the natural capital risk and opportunity statement, and they are the assessment statements, and they really talk about the materiality of the risk of the impacts and dependencies that the organisation has on nature, and the risks and opportunities that are associated with those impacts and dependencies. So again, that natural capital accounting perspective coming together with the natural capital assessment perspective to give a more complete understanding of the interface of the organisation with nature. Brian. And if we're going to frame it as an information system, then I think one of the things that is really useful is to help us to understand, well, what are the characteristics of useful information. And so I think this is really important as a key aim of the emerging disclosure space, is to help users make decisions, provide users with information that will help them make decisions. And ideally, those decisions are framed to shift their capital away from organisations that are degrading nature to organisations that can demonstrate good stewardship of nature. This comes directly from the international accounting standards, this framework around what constitutes useful information. And so useful information is information that's relevant, so it has predictive or confirmatory value and can help the users predict the trajectory of the natural capital or confirm or refute previous observations. It's a faithful representation of the natural capital that's under their management, so it's complete and it's free from error. So complete meaning, it has all the information required to understand the state of the natural capital. It's not overly biased, so it's not overly optimistic or pessimistic in its presentation of that information, and it's free from error. And so here, when we talk about free from error, that doesn't necessarily talk to it's free, it's precise. It just means that the measurement concepts are well defined and the process for arriving at those measurements was applied correctly. So, and then, what we're really trying to do with this information is make it comparable, verifiable, understandable, and timely. And so, making sure that our natural capital accounting principles are aligned as much as possible to existing financial accounting systems is a real key objective in the work that we do. Thanks, Brian. So, but of course, actually disclosing your natural capital accounts and the impacts and dependencies is really just one of the pillars of the disclosures that are being asked of companies. And so there are three other pillars. The emerging disclosure standards are really starting to drive for information on the board's governance of the nature-related impacts and dependencies. What are the strategies the organisation setting in place to realise the risks and opportunities that are associated with those impacts and dependencies, and how is the organisation managing the risks that are associated with those and really starting to draw out the explicit governance and processes that the organisation has in place to ensure that these are treated in seriously and meaningfully within the organisation. Thanks, Brian. And so what we've got here is just some examples of the types of statements that we've been producing for different companies. So on the right here, you'll see again, we have a natural capital income statement, a natural capital balance sheet, and what we call the ecosystem change statement. So these are designed to be structurally and conceptually identical to a financial income statement, a financial balance sheet, and the cash flow statement that we see in annual reports. And that's deliberate, because what we're trying to do is align the natural capital information system to the financial information system and ensure that we can start to quantify that contribution of natural capital to the financial performance of the business. And on the left, what we've got are examples of the sort of impacts and dependency statements that we've been deriving from and these are things that the sort of TNFB are doing. And what we can see is that they're structured around the main drivers of nature loss, so climate change, land use, resource use, invasive species, and pollution. So thanks, Brian. So really, just to sort of summarise where we're heading with a lot of this sort of work, there are a lot of concepts and ideas floating around out there. We're really trying to build off the international statistical standards that are laid out by the System of Environmental Economic Accounting, and bring that into a corporate reporting space. And what we've seen in the last few years, there's been some quite prominent examples. So the Bean Up pilot study is a good one for the mining sector, but there's also a forestry company here in Tasmania that's been doing this sort of work. And Foraco, again, out in front, they've been producing natural capital reports and illustrative TCFD, TNFD disclosures. And I think what we're trying to do is actually streamline all of this into one report, and make that more accessible and more efficient for organisations to respond through the guidance materials. Thanks, Brian. I'm just going to finish off with some of this. So in terms of what the guidance material is, it's really just trying to simplify what is perceived to be a very complex space. It's trying to bring nature and climate considerations together. It's not trying to invent anything new. It's trying to stick as much as possible to existing accounting conventions and draws on international approaches. And the reason why we're doing that is to ensure that this data can be aggregated up and promote comparability between the different between either different reporting entities or different sectors across the economy. I suppose in terms of where we're at on the journey, none of this is actually settled yet, but so it's possibly still subject to change into the future. It doesn't specifically address individual measurement challenges. So obviously, one of the key conceptual challenges in all of this is how do you measure condition, but it does point to how you might start to aggregate the data. It doesn't actually at the moment address quantitative risk assessment, and that's going to be a key component of our future disclosures. And although we're not there yet, I hope at some point into the future we're going to be able to more formally integrate the natural capital accounts directly into the financial accounts. So I think that's me, Brian. I think it's over to you.
Thanks, Tony. Can you hear me okay? Did I turn on my mic? Okay. Yep, good. Okay, well, look, thanks, Tony. And again, thanks for joining us for this webinar. What I'm going to speak about now is the business case for implementing natural capital accounting into the mining sector, and then talk a little bit about the key challenges that were identified through the project that we've undertaken that Tony was discussing earlier. I guess, as Tony mentioned, the suite of publications that have been developed in this project are intended to test the applicability of natural capital accounting and the SIA ecosystem accounting framework in the Australian mining sector, and hopefully help navigate what appears to be a very confusing space that's continually and rapidly evolving. For a little background on the project as well, Tony had talked a bit about the guidance materials that were part of that, but there are 4 documents that have actually been published that are available for download from the CRC Time website. In this project, there were 4 case studies that were used to inform that guidance material Tony talked about, but also inform that business case for why we should be implementing this and what the challenges are going forward. And I've got pictures of them here on the screen. And to go with that was a study of a use case, which I'll talk a bit about later on, around using natural capital accounting and the processes and the systems and the information for more of a strategic purpose, potentially as a forecasting tool. So I'll talk a bit about that as I go through. Not to belabor the point, and Tony and I laugh, I like to steal his slides because there's no other way to put it sometimes. So not to belabor the point, but as mentioned, nature is material, and continuing with business as usual is failing us. And as a result, something needs to be done to adjust the trajectory that we find ourselves on. And it's the mining sector, or the mining sector does have an important role to play in being part of this adjustment, as it supplies the raw materials that we all need, and those raw materials for which demand is expected to rise into the future. Again, there's a myriad of emerging reporting systems that will influence the mining sector, and it is an area of rapid change with evolving requirements as we learn more and more about what our impacts on nature are and what our dependencies are on what nature provides us. Again, as Tony mentioned, and these dependencies and impacts come both as individuals and as part of our business processes and economic systems that we run. And it's actually in this lens that we tend to view the contributions that natural capital accounting can make. We tend to view it as a system that can provide support for meeting these various reporting obligations. For companies in the mining sector, they do have a number of stakeholders that will be looking for different information at different times for different reporting purposes. And just as examples, when we talk about governments and regulators, they're usually looking for reports that demonstrate compliance with regulations, and they want information that can be used to plan development in a sustainable way, which makes effective use of the available resources. They also want information that can help inform new policy-related decisions. So they're looking for that kind of information to be reported and to be provided to them. When we talk communities and society, they're interested in conservation and preservation of nature, and they want to be empowered to make decisions that can lead to economic diversification and improve quality of life. Again, a little bit different information required for those purposes. When we go to where funding for mining projects come from and talk about our investors in financial institutions, they are interested in the full assessment of risk that affects the projects that they invest in or the investments that they make, because they want to ensure that they are participating in sustainable operation or sustainable options and potentially looking at green investment alternatives. And so not only a financial risk analysis is needed, but also the risk that nature plays or that nature poses to those operations. And these are all areas where natural capital accounting can help. And it's an important part of the business case for implementation, of course, because it's it's this reporting function that contributes to that social license to operate. Well, I seem to have, there we go. And this is where thinking about natural capital accounting as being akin to a financial accounting system as a process of recording, summarizing, reporting historical transactions from our operations allows us to communicate that past performance to external stakeholders. However, as Tony mentioned a bit about the information system side, if we do recognize that this externally focused reporting system is just an output from that accounting information system, where the purpose is to simply collect, store, and process financial and accounting data, then we can actually use the information for strategic purposes similar to a management accounting system or a managerial accounting system when we talk about finances. In this system, the managerial accounting system is defined as a practice of identifying, measuring, analyzing, interpreting, and communicating financial data, but similar to the financial accounting system. But in this case, it's for managers to help them pursue the organization's strategic goals. And it's this lens where we would then be looking at information coming out of a natural accounting system or natural capital accounting system as being used to support strategic decisions through such processes as capital budgeting, forecasting, and things like analyzing variances. And this is one of the use cases actually that we tested in this work, was to look at, with those natural capital accounts having been created, could they actually be used as a forecasting and planning tool, or could the information be used as a forecasting and planning tool to look at how our rehabilitation would proceed into the future, to gain that understanding of what the trajectory would be and get a sense of where we will achieve. And I urge people to read through that document if you have a chance. It is an interesting and exciting use case in that space. And for me, at least, I think this is the power of natural capital accounting. It's not necessarily just the reporting side, but it's also that ability to use information for strategic decisions that will create value for an organization as they move into the future. And so if I look at a bit of a continuum in the accounting system, or in an accounting system, by collecting data and data about our historical activities and outcomes, we can meet our disclosure obligations by communicating on our performance. And that's where the thrust is a lot of time. However, if we stop here, we might actually be missing an enormous opportunity that goes along with that requirement that we see. And because this reporting can demonstrate accountability, which can then give us credibility in our operations. And this credibility then provides legitimacy to our operations, which means we can use the results to suggest opportunities that can result in value addition and creation of strategic advantages. And this is where using the information for managerial purposes can add value to the organization. And so there's actually two prongs to the business case. The disclosure side, which is important, absolutely, and Tony's talked very much about that, but as well this opportunity to utilize that information to improve our business practices and to potentially change the way we operate. But of course, there are challenges, or there are challenges with implementation in these spaces. And we need to address those challenges if we are going to be able to recognize those opportunities that exist. And in the work, we've tried to group these challenges into three general areas. And so the first is around data. And again, Tony talked a bit about data in that, but good data underpins robust natural capital accounts. And when we talk about data, the old saying, garbage in is garbage out, holds true. We can build scenarios and perform simulations on the data, but if it's a poor quality going in, it will not provide the desired strategic benefits. And this data provides the basis for our measurement of of our impacts and dependencies on natural capital. It provides the basis for the valuations that we use and those valuations that go into the disclosure aspects, as well as enabling those future-focused strategic decision-making opportunities, because you want to be able to trust the information you have going forward. As such, data requires a framing and the development of a data strategy across the industry for compiling comparable accounts. And this may include such activities as establishing data standards to ensure consistency and reliability in collection, reporting, and sharing, so that we can utilize information or we can utilize information together or reports together. Of course, investment in data management systems and related tools that can provide access when needed to those who actually need the information. Performing data needs assessments to identify disclosure requirements of different stakeholders. So making sure we're meeting the needs of all of our stakeholders with the information that we collect. When we talk about sharing and utilizing the data across the sector, it means developing best practices, protocols, and databases that enable that broader use of information across organizations. And of course, continuously monitoring what the data needs are and priorities to enhance the data systems as things change, as they do. As we evolve in this space and things change, we'll need to change the system we have in place. The second area that we see a challenge in that needs to be addressed is with respect to the way natural capital is valued. Now, improving these techniques can facilitate adoption, but whatever the methodologies are that we use, they need to include appropriate materiality and risk assessment techniques, as well as recognize the unique characteristics of natural assets that often mean different things to different groups. So not everyone will view that natural asset in the same way, because they all have different perspectives and potential uses for the natural assets we're talking about. In many cases, this means that we need to start thinking about value differently, not just as a price or a monetary term, but we need to actually think about value differently and what it means. And some of the steps that required in altering this valuation or in addressing these valuation challenges would be things like standardizing approaches to identifying ecosystem assets and services and assessing their importance. Developing formats for maintaining and disclosing physical accounts alongside monetary accounts. So, as I said, we need to think about value differently. Not everything can be monetized in the way that we think about monetization, and it may make more sense to actually have the physical accounts alongside and being able to use both of them together in that assessment process. Developing record management practices and accounting processes that facilitate the preparation of the ecosystem change statement. And this is one of the statements Tony talked about in the guidance material, but it's an important one that talks very much about that year-on-year change in, or that period-on-period change in the natural capital that's under stewardship. Also developing frameworks to quantify the value of ecosystem services. And this is that idea of ecosystem services can represent a public good rather than a private good, and therefore they will have different values based on different perspectives. And that all needs to be brought together in some sort of a multi-criteria view, I guess, of what it is we want, or of what the value of that is. We need to think about intangible factors, because when we start talking about different viewpoints and different perspectives, there are a lot of factors that we just don't know how to value at this point in time, because it's not part of our typical valuation approaches we use. So we want to be able to incorporate those, what I've termed intangible factors here, into the way that we arrive at a valuation of the ecosystem services. And of course, we want to test approaches to ensure that the accounts meet the definitions of useful information that Tony mentioned, which are, of course, relevance, reliability, accuracy, comparability, timeliness, and understandability. The third challenge is the availability of capability and capacity to create and manage natural capital accounts and the, I guess, natural capital accounting system itself. If we look at having mining-specific natural capital accounts that generate both financial and non-financial information, it's going to require a multidisciplinary team to manage it, and that'll include people with accounting background, people with environmental and ecological background, and people with legal skill sets. Again, all that usually speak different languages to a great degree, and therefore there is a need to build capability in how these groups can communicate with each other. A key success factor for the uptake and longevity of natural capital accounting will be this capacity building, but not just a one-off, but to continually build that capacity and capability to align the skill sets with any changing expectations and requirements. And again, some of the activities that may be needed to get there are to, of course, engage with stakeholders on all areas to develop an understanding of the importance that natural capital has into the economic decisions that are made. Engaging with Indigenous Australians to gain a complete understanding of the importance and value of natural capital. It's that there is a role here to look at that link between Western science and Indigenous science to make sure we have that complete understanding of the value that natural capital has. Building capability and capacity throughout the data ecosystem. As mentioned, data is a big part of this. The NCA is data hungry, or requires data, and there is a requirement for spatial data analysis expertise in the system in that regard. Of course, continually upskilling the expertise so that we can fill any gaps that tend to emerge, and there's different ways of doing that through professional development, targeted training, et cetera, et cetera. Preparing guidelines for recording and disclosure of upstream and downstream components of the value chain. So if we're going to move beyond just our operations and start to integrate beyond that with our impacts, dependencies on natural capital, and we're going to have to go up and downstream from our sort of operations, there needs to be some sort of guidelines around how we look at those other ancillary areas that we deal with. And of course, if we want to use this in a financial or in line with financial accounting measures, we need to affect the auditing standards to make sure that the accounts can be audited independently, they can be verified and reported on. And so what I would want to leave you with is that there are some challenges to overcome, but I feel that the potential benefits outweigh those challenges and provide an opportunity or an exciting opportunity for the mining sector to actually realize some real value addition in the space. So I thank you for that. And I guess, Tom, if you're there, I may throw back to you at this point.
Thanks, Brian, and thanks, Tony. An excellent presentation. Please do add your comments or questions into the chat just while you have a chance to enter those. I did have a question myself, both for Tony and for Brian. It seems to me that the natural capital accounting work has been a topic of interest for some time now, but what I've seen or observed from afar, it's not an area that I work in, but what I've observed a kind of an acceleration, a kind of a maturing or development or kind of a moving forward of this whole area of work over recent years, and this something like a culmination of quite a long time of work. So maybe just talk a little bit about first of all that development, and then in particular how you sort of see this heading over the next few years. So there might be people on the webinar who are thinking, what does this look like in the years to come, and how is it going to interact with me and my role? So maybe just talk a little bit about those timeframes and those directions. Is that all right?
Tony, do you want to have a?
Yeah, sure. Yeah, it's a good question. I think I think what's really driven, particularly the development in maybe the last 3 or 4 years, is I suppose the adoption by bodies like the International Reporting Financial Reporting Standards of this concept of nature and climate risk, and starting to ask organisations to really think deeply about how they might disclose that. And so that's now being embedded, and those standards are emerging, and so and Australia will adopt those standards. So I suspect there's a component of this that is being going to become mandated, and so I think a lot of the interest in starting to get, particularly in the private sector, around getting ahead around these concepts of natural capital and natural capital assessment, is just acknowledgement that this is on the horizon and is coming, and we need to build and that there's a need to build capability in all of this to really drive that. So I would imagine, within the next by maybe 2027, that large organisations will at least initially be actually being asked to disclose this type of information annually. And sure, that's going to be particularly focused for listed companies and things like that, but the focus on the whole value chain brings the influence of these emerging accounting standards right to all sectors of the economy. And so because everyone's going to be asked to do scope 3 type disclosures as well. So what are the impacts and dependencies, and where are the risks and opportunities in your value chain? So and that's where I think the accounting starts to come in, because it really starts to speak to what's the state and condition of nature for those particularly primary producers. And I count mining as a primary producer as well, right? But so it is starting to. So I think there's a more formalized environment. I suppose when I started out on this journey, it was all very much voluntary and nice to have, and we built business cases around premium products and social license and things like that. But this is actually formalizing quite quickly as the global economy sort of adapts to this nature and sort of climate constrained operating environment that's heading our way. So, Brian.
Yeah, I might just add to that. You've covered most of what I was thinking as well, but I guess from a implementation point of view, I guess accounting has requirements associated with it. And we talk about accounting statements and accounting information systems, as we both alluded to. There is a definition of what useful information actually is, and it requires a bit of a structured data collection system. And so it could actually influence the way that we collect environmental data and the way that we collect our data. And if I think about mine closure, post-closure monitoring, the types of monitoring systems we put in place so that we have data points that align not just locationally, but also in time period, and so that we can actually have that information being processed. From a strategic side, there's also I guess, as this becomes more recognized, or as groups start to recognize the value that can be obtained from utilizing information, and we see what that requires, it could actually change the way we plan mines outright. I start to think about the case for the importance that natural capital has, that nature has in a region. And just as an example, if we then look at a mining operation who has a rather large footprint, there might be much more impetus being put on progressive rehab being done, or some sort of smaller site planning and on smaller cutbacks or increments, in order to make sure that we're disturbing as little as possible at a time. And so I think there will be a lot of impact that comes from this, and a lot of changes. Again, I think, as Tony mentioned, the reporting is probably going to be the first thing, and that requirement for reporting, and those other changes would follow on from there.
Thanks, Brian. Thanks, Tony. So we have another question here in the chat. I'm just going to read out the question. How material is mining in comparison to, say, deforestation or overfishing to our natural capital account? I.e., what percentage of impact to our natural capital account is attributable to mining?
Tony.
Thanks. Look, I think I can't give you the percentage off the top of my head. Actually, and maybe we'll get a bit of an insight. I think the national accounts are coming out next year, but it is a material issue for mining. I mean, the impacts of mining are long-lived, and sure, I mean, you can argue that mining itself has a relatively small physical footprint, but it is nonetheless a significant impact on the biodiversity and the natural capital that it's being impacted on. You know, that's not, but you know, all sectors of the economy have an impact on nature and natural capital, right? There isn't a no one's in a nature positive position yet, you know. And I think, but the important thing is that the mining sector and the resources sector are stewards of large areas. I mean, so we've just done some work with BHP, you know, on their biodiversity, done a biodiversity assessment for BHP across their 6 million hectares in Australia, right? So as you know, the mining companies can have a really significant, they can make a significant contribution to society's sort of efforts to become nature positive, because they're stewards of large areas of land, and you know, they're directly at that interface with nature. So you know, let's think about the positive contributions that they can make, rather than try and focus on, you know, what the impact is relative to ag and things like that. So
Right. Look, we've just got a few minutes left. And so before we wrap up, I did just want to ask this one question to both of you for a brief comment. What do you think is next for this area of work, and in particular in relation to what CLC Time is doing? What do you see coming down, you know, in the ahead of us? And yeah, just a brief comment on that from both of you would be great.
Tony, I might just make one brief comment, if that's okay, and then I'll pass to you within that space. So one area that we are looking at moving forward with is along that forecasting piece. As I mentioned, that use case along using the natural capital information for forecasting in order to show a strategic value out of it. So that's one area that we are looking at pushing forward on in order to show those use cases as well. But then Tony, around sort of the space in general.
Yeah, look, I think there are a couple of things that probably from our perspective in the resources sector, and probably in the whole natural capital space, that we haven't done very well yet. And the two big ones are around this problem a lot around impacts and dependencies across the value chain, and starting to understand, you know, which sort of gets to James's question earlier around, you know, what's the comparability, or, you know, where do the impacts and dependencies really lie in these value chains? So I think that's going to be an increasingly, it's an important part of the required disclosures regime, and it's not something that I think anyone is doing well at the moment. And the other part is really around quantifying what the financial impacts of those impacts, and what the financial implications of those impacts and dependencies are. So moving from what is at the moment largely a qualitative risk assessment to a much stronger quantitative risk assessment, because these disclosures are asking around what are the implications for an organization's, you know, balance sheet and income statement of these nature-related risks and opportunities. And so I think there are two big areas of development that are firmly, at least on my radar, for the next sort of 4 or 5 years to actually meet those disclosure requirements.
Thanks, Tony. Thanks, Brian. We're going to have to leave it there. It's been an excellent seminar. As you can see, we've got some of our reports, then outputs on the screen there. And if you look in the chat, you can just sort of follow the links if you want to look at some more of those materials. We've got quite a lot of those materials also on the website. We do have some additional seminars coming up, including a Restoring Country webinar tomorrow. The link is also in the chat. And our next Dig Deep webinar will be on energy transition through economic transformation on the 28th of August. So lots coming up. It's been a great webinar, and thank you, Tony. Thank you, Brian, and thanks to everyone online.
Thanks, everyone.
Thanks, Tom. Thanks, everyone, for coming.